Ira Epstein of Linn Associates with your financial market wrap-up for this end of a quarter and end of a month. It is June 30th, 2020. It is about 6:40 in the afternoon, and 6:40 at night, I should say, but it's summer. To me, it's afternoon. I love it. And we'll see what goes on. We're getting a down move right now in a number of the stock indices. Now, let me tell you a few things that I've learned over the years, and I've been around a while. I've been a registered broker since 1969, so that's quite a while, right? You get to the end of a quarter in a month, money gets redeployed. You get a certain amount of window dressing. You'll see that at year end. You always do. You see it at the end of quarters. Months to a degree. If you have money managers and they get paid on how you did by the month, certain things happen at the end of the month. If they're having a good month, you think they're going to blow it? I doubt it. It's the real world. That's their pay at the end of it. But they want to redeploy their money as the market starts fresh. And that is what the evening trade is about. So we had a big rally today at the end of the day in stocks. And now we're getting, be it profit taking or new money being deployed. I don't know which. But that's what I think goes on. How do I know it? Well, I can't prove it, can I? But I think experience counts. Now remember, I own my division of my brokerage firm in futures. I have owned stock firms. I mean, I've done this a while. And I was a large discounter in stocks and the commodity market, as many of you know, over the years. Now we're in the one-on-one brokerage business because I can't compete with zero commission. Why am I going to try? I wouldn't. I want to compete with service, which is zero commission. I doubt you get what we offer. You could, but I doubt it. So we look at this. Let's take a look, if we could, at what the market's been doing. Any way you want to work it. On the weekly chart, we have a pattern of lower highs, lower lows on a weekly chart. Now, we haven't closed for the week yet. We are up 74.75 points, but you haven't taken out this high. So, in terms of the swing line on that basis, the lower highs, lower lows is a downtrend. It's 100% nullified because prices are over 28.69, which is the 18-week moving average. When they nullify each other, bang, you got nothing. So you have a correction in a market that's been otherwise bullish. When we step over to a daily bar chart, you can see how the market is still caught, and I've said this to you repeatedly now for a while, between this high and this low, and you're just walking back and forth, going nowhere in the process. When I look at what nowhere means, well, up until today, you had a pattern of lower highs, lower lows. I don't think you're going to disagree. That gets nullified if this high right here gets taken out, which lo and behold it did. So now what's the pattern? A lower low, higher high. No trend. What did the market have to get up to nullify that? It had to rally back to what I call the line in the sand and take out that high. It did both. And as you heard me say so often, the 18-day average is the number the market likes to fight at. If it drops much from here, the support's back at the 200-day moving average, right through here. So you're caught in that. Can anything be set up in a downtrend now? No. Uptrend now? No. Why waste my time? When I take a look at the Bollinger Band, you haven't hit one since back here at the beginning of the month. And when I look at momentum, it's up. So I have a market with downside bias since prices are right now trading under the 18-day average. The swing line has no trend. Momentum's pointing up. I'll leave you play with that. In the NASDAQ, we had a correction from the Bollinger Band high back to the 18-day average of closes. We had an outside day down. Market came up, and let me give this to you, today takes out that high. That's often a prelude to the market going to the what? Upper Bollinger Band. We'll see if it does it, but that's my rule of thumb. My rule of thumb is when you take out the high of an outside day down within 2 trading sessions, the market runs to the closest major moving average or the upper Bollinger Band. I'm looking for that. I don't care if I'm right or wrong. It's nice to see what it's doing. It's also overbought as can be, and I know I don't want to be short, and I know I don't want to be long right there. Why? I'm not trending. When I take a look at the Dow Jones, we have a pattern of lower highs, lower lows. That's a downtrend. You have divergence because momentum's trying to point up, and you've got the bias down. Okay. What would the pros be doing here? I'd probably trying to sell the market at 25,879, but do they want to carry anything? Again, we're going to have a market that is not open in the cash stock market on Friday. It's completely closed. The futures will be open till noon. Trading is going to be what you think's going on for the day and how far away from cash do you want to drift. And then when it closes at noon, now you got to worry about Friday afternoon and night, Saturday all day, Sunday through the day. What's COVID going to be like? Who knows? The Russell, out of the trend. You got a lower low, higher high, right back to the 18-day average of closes, caught in a sideways band. I don't see anything to do. VIX turned down. Now, in my morning subscriber video, I was warning traders to watch this part of the trade. I said, if the VIX drops, we probably get a rally in the stock market. And why? This is how the VIX looked coming in. You really had higher lows, a higher high. But if you take out 28.93, you break that whole pattern and break the market down. Exactly what happened. So I'm looking at the market today going, aha, they're probably going to drive the market end of the month, make it look pretty. That's what happened. Now tonight we're giving some of that back. I'm going to ask you a question. We're about to get the FOMC minutes. So what do you think people are going to focus on? We've seen already what the Fed chair said, and he's talking about COVID and what it might mean, and he wants the government to initiate programs and keep them going. The government's trying to get out of certain programs or extend them using monies that haven't been spent so far in other programs. Reallocation. Makes sense. All right, what else? Got a bit of a problem with all this when you're trying to look at this and see if the notes are going to say anything to you about how they're looking at the yield curve. Because the notes, well, I'm sure the Fed chair knows what's in them. He put them together, I'm sure, and has approved them. But in looking at it all, the market wants to know what they're saying on yield curve. So that's what you're looking at. Now, if we look at the market, you still have an embedded reading. As much as it's pointing down, it can't afford to drop much more. It would lose the embedded reading intraday. Intraday is not important. It's the end of the day that you care about. Therefore, I don't think the pros are buying right here. The market didn't get up to the upper Bollinger Band, and I think they're concerned, and they might even be taking money off the table. I see the same identical pattern in the 10-year. I get concerned when I see it leaning over like that, and then we go to sleep, we wake up in the morning, what are we going to wake up to? In the dollar index, the market tried to get to the upper Bollinger Band. That's all I was looking for in an overbought market, and it didn't make it. It missed it today by, let's see, 7 points. Still missed it. If it takes out 97.08.5, you negate this whole pattern one more time. Now, admittedly, it's in an uptrend. You got higher lows, higher highs, terribly overbought. In the euro, you've been in a downtrend, lower highs, or is it a downtrend? Well, if we look at today's low and come back to this low was 112.10. Today's big break was 112.08, so we have a lower low and a lower high. The bears took control in an oversold market. Any reading under 30's oversold, and you got both of them there. So do I think the pros will defend the 18-day average? I don't. Not in an oversold condition. As I step into the yen, you're in a downtrend. And you've been in a downtrend. You confirmed it yesterday with the first settlement under the 18-day average. The first support did not hold of the 18 and the 100, and you fell down from there. You're too oversold, though, in my opinion, to try to start betting, we're going to get to that lower Bollinger Band, unless the band comes jumping up. The band this morning was 92.06. It just jumped 45 points on you. That's what seems to be happening. So I think the downside is going to be muted because of what's going on there. That's one way to look at it. So you put it all together, you try to come up with game plans, and that's what I try to do for you. Now, wait, I don't want to go there yet. I want to finish you with Bitcoin. Bitcoin, still, what? Right now, you've got a lower low but a higher high. We don't know what this is going to do, and we know it's oversold. The drift of the market is on the bearish side, but too oversold to do anything with it. Brent versus WTI. Now, I'm going to use in this market now, it's going to be the SEP for this chart. I'm going to be still trading, though, on the futures and deciding in the WTI the August. But you're back to $1.90. That differential is crashing in. When you look at the SEP Brent, The market is in an uptrend with higher lows, higher highs, support the 18-day average at 41.16. You'd have to take out 40.01 to break the uptrend. Otherwise, the market could drift up towards the 43.30 zone. In WTI, the trend remains to the upside with higher lows, higher highs. If the market can rally out of this tight band, 41.18 is going to be the objective. We saw today the API numbers come out for our WTI, and we had a net draw of nearly 8 million barrels. That's very good, but you're only up 33 points. They're not looking for that out of the EIA. They're only looking for about a 2 million barrel net draw. Gasoline, this uptrend part came to an end. You're just drifting sideways. I don't see anything in that market. And in the nat gas, nice rally back to the 18-day average. Did not take out that high. The market's trying to work out of an oversold condition. It's still in it. This number, the D line in blue, is under 30. As long as it's under 30, the market's still oversold. Now, one of the things I try to do for my clients is give them confidence in their own ideas. That's it. Now, if their idea is wrong, I want to give them confidence in understanding why their idea is wrong so they can understand that in terms of chart action. Chart action doesn't mean you can analyze till you're blue in the face that you're going to win. I wish it did. It doesn't do that. But it does give you the discipline to approach a market with a game plan and try to win instead of throwing that dart out there and following blindly whatever the news says, because if you follow the news, in most cases you get pretty burned. I cover 40 charts for you each morning. I start recording 5:40 in the morning. The charts are going to look like this. You're going to have more moving averages on them. You're going to have more studies on them, more explanation from me on them, more tricks in them, and I explain all that. I go through the markets in this exact sequence each time. They build on each other. And there's a slide bar if you go to our website for this. So that let's assume you're interested in energies. Well, why do you have to go through all this to get to the end? But where does the energy begin in that slide bar? You can slide your bar to your blue in the face. You get frustrated. Just drag it and all of a sudden the word energy pops up. You're right at the beginning. Can I make it any easier than that? Same in metals, meats, whatever it is. What do I charge for this service? Because I'm not getting up at 4 in the morning and putting this out for free. You can imagine that. It's pretty simple. I charge $7.95 per 30 days for your first 30, and then after that, it graduates to $15 if you want to stay with it. It includes our mobile applications. You can keep up with what I'm doing. My videos will play through that as well. You get free access to my special reports, which I normally charge $2.50 to view. They're thrown in with this. And now the webinars are going to start. As I told you, in July, I am absolutely starting them. I'm trying to see if I can charge non-subscribers for them. And that would be $2.50 for a view. It'd be free to my other people. So we're putting this all together. How do you get this? It's simple. You can read all about it too on our website. Our website, go to research, read about it, take it from there. This is what keeps this show going. So like public broadcasting, and I'm certainly an entrepreneur that's not public, your help keeps this going. I'm Ira Epstein. You have a good day.